Hello, this is Mike Swanson. You're listening to the Wall Street Window podcast. Well, yesterday the stock market took a hit, and we got to talk about that. It shows it ain't going to be an easy year all the way through, a bump in the road. But is it more than just a bump in the road? Is this the start of a new bear market? You see, yesterday the Dow fell over 500 points, and it was the biggest single one-day drop since March of 2023. And the drop came with news on the opening bell that the Consumer Price Index, the CPI inflation report, was hotter than expected. Inflation's not going away. Now, it wasn't a crazy report because the expectations were, the consensus Wall Street predictions were for a 2.9% annualized increase in CPI. It came in at 3.1. But what it did was it shifted the odds of the pace and number of interest rate cuts this year. Instead of a cut in May, now the Fed Fund futures are looking for one in June and maybe like three. The Fed wants to lower interest rates. So does it make that much difference if the first cut's in May or June? Just the other week on 60 Minutes, Jerome Powell said mid-year he wants to lower interest rates. They want to do it. Why? Political reasons. You see, they're scared. They don't want a recession to happen this year, not in an election year, because then they'll get blamed by the Democrats for sitting there and letting it happen. However, at the same time, the Fed doesn't want to be lowering interest rates all of a sudden in the fall right before the election, because then they'll get blamed for the Republicans for being in Biden's pocket. So they want to lower rates ahead of the election and to help minimize the risk of recession. That's why mid-year is on Jerome Powell's mind. At the same time, economic data that we have in front of us now does not justify lowering interest rates. CPI came in hot last year, and the St. Louis Fed is projecting that this quarter is going to show 3% GDP growth. So there's no recession right now, and inflation has not gone away. Nonetheless, the market has rallied since October on the idea that interest rate cuts are coming and the Fed must deliver, and it will. But the market took a hit. I want to suggest to you that the stock market drop that happened Tuesday, while it was significant, was not simply the result of this news, and likely is not the start of a new bear market, not an instant crash, but it's likely going to result now in weeks, if not months, of sideways price action for the averages. We could even see the S&P 500 test its 50-day moving average. When the new year began, I was thinking that we'd see a 2 or 3 week pause to work off an extreme price overbought condition in the rally. Now we're in a different situation, and I talked about that this week on Sunday. And not just a video, but a blog post I did showing that the market rally had narrowed to the extent there was only a couple stocks that made the whole entire S&P 500 go up on Friday when the market made a new high. In fact, 200 stocks were down. And when the market rally narrows like that, it tells you you're in the ninth inning and it could reverse or lose momentum at any moment. And it happened on Tuesday. And that's where we're at. And now, does this mean we're in a new bear market? What it was internal deterioration in the market. When only a few stocks are making the market go up, that's a negative. However, for it to be something that's going to lead to a near bear market, it has to happen not just for a couple of weeks, but for months. So Last year I was bullish on the stock market. In fact, in January last year I was saying we're starting a new bull market, and that's after I had been a bear in 2023. In 2022, though, I was pointing out that, look, we're having internal deterioration in the market, and it's bad. Much worse than what's happened now, because it was going on for months and months and months, and I was saying in 2022, this is going to lead eventually to a bear market. And it did in 2023. But I can't say that now because it's only been happening for a couple of weeks. And frankly, my guess is the stock market will end up making new highs before this year's over. So that's my take on the situation. Personally, as I mentioned in the Sunday video, I did some selling last week. I took some money off the table because of this narrowness of the market rally. Told me time to take some money out of the game, and I'm not the only one who did it. Saw a story that Jeff Bezos sold billions of dollars of his Amazon stock, billions. So people are unloading, and when that happens, it's time to step back. You don't have to trade every single day, and that's what I'm doing. I'm not planning on trading this week. I want to wait until I see a fat pitch come up and then do something. And that means I'm going to watch the market action carefully and wait. And when I see a great opportunity, tell you about it. But I'm not going to just spit out endless picks, endless trades just to do it. So that's where we're at with Wall Street Window. And stay tuned and keep our eyes out for what's going on and navigate the markets this year. And I'll be talking with you later.